we have a real problem here. And that's why I say that we've embarked upon something I call the Greater Depression. And what's going to happen, or what is happening, is it's going to be much worse and much longer lasting and much different, this depression, than the unpleasantness of 1929 to 1946. And during that period, incidentally, war was a big part of the equation. Uh, I think the war situation is going to get much more serious, quite frankly.
Doug Casey joins us today. He is a best-selling author of Crisis Investing and later Crisis Investing for the 90s. We'll be talking about crisis investing today. It's a very timely theme as Doug believes we're going into a greater depression. What does this greater depression mean? Why will it be here? And what is going to happen to our investments? How do we protect our wealth in this greater depression? We'll be talking about these themes as well as Doug's upcoming book in his High Ground series of novels. First, it was Speculator, then Drug Lord, then Assassin. Then the protagonist is going to transition into another role. Doug will explain why and how this fits into today's society. This episode is sponsored by NordVPN. Doug, welcome back to the show. Always good to see you. Thanks for being here.
It's a pleasure to be here with you, David. Although you're in Vancouver, I'm in Buenos Aires, where I am a good part of the year.
I reckon that the weather where you are is currently better than the weather where I am. Although I'm hoping that could reverse sometime soon because we've had enough
Well,
of winter here.
well, Vancouver's got the best weather in the world during the northern summer, but Buenos Aires is a very moderate climate 12 months of the year, so it's nice to be here.
In Argentina, you also the Argentines elected a new president. We'll talk about economic reform a little bit more towards the middle of the interview. Let's start by talking about, you know what, let me, sorry, give me 30 seconds. There's a window washers back.
Oh, that's very authentic. Don't scare them away or cut their ropes. That's great. It shows that
Well, you know
you're
what?
not
Yeah, you
using
know what? I'll
those
keep
funny
it.
backgrounds.
Let's
That's great.
let's keep this going. I want to start by let's start by talking about global growth. Okay. The WEF World Economic Forum president, he recently made a remark at a summit in Saudi Arabia. Borja Brenda, he said that global growth this year is around 3.2%. It's not bad, but it's not what we were used to. The trend growth used to be 4% for decades. He said that there's a risk that global economy could fall into a stagnation like we saw in the 1970s. He said we cannot get into a trade war. We still have to trade with each other. Are you concerned about a global stagnation, Doug?
Well, I'm actually more concerned that people give any credence or pay any attention to these people from the World Economic Forces. I mean, they're the forces of darkness and evil, most of these people. Answer to the question is that I'm a long-term optimist. Why? I'll tell you why. Because, first of all people, at least mentally sound people, tend to produce more than they consume and try to save the difference. We're kind of wired like squirrels that way. That's number one. And number two, technology keeps advancing. And in fact, it's advancing at the rate of Moore's law. So you add those two things together and you come out with a happy ending. But at the same time, and this is why I'm gloomy for the short term, uh, the world has, in recent years, been consuming more than it's been producing. That's what all the debt in the world is about, and the amount of regulations that we have today, and the level of taxes and the level of inflation make it much harder to produce and for technology to advance. So it could go either way, but I'm putting my money on what I call the Greater Depression, a period of time when most people's standard of living goes down significantly, and it'll be noticeable. So these guys pulling numbers like 3.2%, it impresses me as nonsensical. These are made up numbers. Uh,
The trend does seem to somewhat support your thesis of either a greater depression or some sort of greater slowdown, because again, the 3.2%, 4%, the number here may not be relevant, but the key point is that it missed consensus expectations for what global growth should have been. Things are slowing down much faster than anticipated. Are you observing that in your own life or research that things are slowing down at a much more rapid pace than before?
Well, here in Argentina, where I am right now, we're in an anomalous situation because the current president, Javier Milei, is overturning 100 years of Argentine history, where this country has gone from one of the most prosperous and wealthiest in the world 100 years ago to scraping the bottom of the barrel, where they say half of the Argentine population are in poverty at the moment. But he's turning that around. So my personal boots on the ground experience here in Argentina is not at all like what it is in the US or Canada. Things are getting better here. There's a period of readjustment where they're firing not just thousands, but tens of thousands of government employees. And, inflation's been running several 100% per year, which makes it impossible for the average Argentine to save money. That's changing too. So, personal experience. Well, here in Argentina, it's anomalous. Doesn't relate much to the US or Canada.
Doug is going to elaborate more on this Greater Depression and the investment implications. But first, a word from our sponsor, NordVPN. On this show, we regularly cover how to grow and protect your assets, but one of your most important assets is your privacy. Every investor needs to protect their digital privacy and footprint against hackers and potential viruses. According to Chainalysis, 2022 was the biggest year ever for crypto hacking, with hackers stealing $3.8 billion in cryptocurrency. And according to Duke University, more than 80% of US companies claim to have been successfully hacked. One of the best ways to protect yourself and your privacy online is with NordVPN. Not only does NordVPN hide your identity online from malicious actors and criminals, but it also comes equipped with malware protection. NordVPN also prevents you from accessing dangerous websites, allowing you to enjoy your favorite financial content securely. And the best part is that it is easy to use. Just download and click. NordVPN is available for your phone or computer, and they're currently offering 65% off on a 2-year plan plus 4 extra months. Simply click on nordvpn.com/David Lin in the description down below to learn more. What should the correct government policy be to combat hyperinflation? Let's take Argentina as an example, but we can expand this conversation to a more generalist theme of how to combat inflation. But in Argentina, like you mentioned, triple-digit inflation, hyperinflation. Should the government have dollarized? Would there have been a better solution to dollarization?
Well, let me comment on something that you said. What should government policy be? And the fact of the matter is, I don't believe in government policy. Now, that sounds like a shocking thing to say, I know. But the reason I don't believe in government policy is because government as an institution, assuming you even believe in government as an institution, but it should only do 3 things. It should defend you from force and violence. That's all it should do. That implies an army to defend you from violence, force from outside the bailiwick of the government, police to defend you from criminals within its bailiwick, and a court system to allow you to adjudicate disputes. So this has nothing to do with government policy, actually. That's all the government should do. Unfortunately, in most places in the world, the government does everything but those 3 things. They try to regulate everything, tax everything, influence everything. It shouldn't do any of these things. So I'd like to get down to the kind of the basics. People forget what the basics are, and those are the basics. Government is coercion. It's force. It comes out of the barrel of a gun, like Mao said. So I want to limit it extremely.
Okay, so what about the central bank, which supposedly is an independent entity from the rest of the government? Should we have a central bank to regulate inflation or the labor market?
No, you don't need or want a central bank anywhere. They're engines of inflation. Governments they talk about central banks being independent. This is nonsense. Central banks are used by governments as a means to inflate, and inflation is how government generates a great deal of its income. Where does government get income? From taxes. Okay, that's simple enough. But also by printing up money, which it gets to spend. So no, the central bank serves no useful purpose. It should be abolished. Uh, Listen, people forget that before 1933, all the governments, all the countries of the world used gold as money in day-to-day commerce. You didn't use fiat currencies, paper money. You used actual gold. And since then, we've had endemic inflation. So no, abolish the central bank. And of course, this is one of the good things that Milei has promised to do, and I believe he will do
Well,
here in
he's promised to
Argentina.
dollarize, and he hasn't done that yet. Does it look like he's going to keep that promise?
I believe he will keep the promise. And one of the reasons that he'll succeed in that promise is that the Argentine population, they can't save in pesos. I mean, only a total idiot would try to save in Argentine pesos. They've been saving in dollars. So there are hundreds of billions, by best estimates, of US dollars that are secreted offshore in foreign bank accounts and under people's mattresses here in Argentina. And his first step is to stop printing pesos, number one. And this peso has stabilized, incidentally. It's maintained the same exchange rate with the dollar for the last several months. This is really unusual. And yeah, people, look, what Milei has said is you can use anything here in Argentina. You can use anything you want as a currency. You can use dollars, you can use pesos, you can use euros, you can use gold, you can use Bitcoin. They're all equally legal here. So that's an excellent first step. You don't want to rely on just the dollar. I mean, the dollar is a floating abstraction. It's the US fiat currency.
Going back to my inflation question, then, if we have a country like Argentina that's experiencing hyperinflation, if not for government policy, then what can be done to fix that and make it easier for the people?
Well, stop printing money. There's a famous anecdote about Ludwig von Mises, who is Javier Milei, the president of Argentina's favorite economist, and mine too, where the German government asked him what to do about their famous hyperinflation in the early 1920s in Germany. And he took a couple of government members out at night to a printing plant where in the middle of the night, the government was printing up marks, destroying the currency. He says, kill that noise, stop that noise, which was the noise of the printing presses, printing more marks. So that's the answer to the question. And then let the market decide what it wants to use. Eventually, hopefully, Argentina and the whole world is going to go back to gold. And it's not just Argentina. I mean, look, all around the world, people are trying to get rid of the dollar because they know that the US government is printing up trillions of new dollars every year to finance its deficits. So the dollar is becoming a hot potato. The Russians don't want to use the dollars for all kinds of reasons. The Chinese don't want to use it. Nobody wants to use the dollar. They realize that it's a hot potato. So what are you going to use instead of the US dollar? Well, you're not going to use the Russian or the Chinese or Indian currencies or the euro. They're going to go back to gold. That's the answer to the question. I know it sounds incredible, but that's what's going to happen.
Is that the best way to discipline the government to stop printing money, which is to anchor their currency to gold or any other hard asset, or perhaps the dollar, or perhaps tie their currency to another country, like form a eurozone, for example, whereby many countries share the same monetary policy?
I think it's a mistake for countries to have currencies. Government should not be involved in the currency business, quite frankly. And at the same time, I'd say government shouldn't be involved in any business, shouldn't be involved in the education business. It shouldn't be involved in the food business or anything. Government should just protect you from fraud and violence. End of story. I know that's a shocking thing to say, David. I mean, that's not what most people will come to. That's not the world they live in right now. I'm telling you what should be, not what is.
Well,
And
you know,
when it comes to when it comes to what is, what we do as speculators is take advantage of the stupid things the government does, the distortions it creates to create opportunities in the market.
okay, we're gonna get back to the economy, but since we're talking about government policies, I know you don't believe. I know that's an oxymoron for you, but I'd like you to comment on the recent proposal to raise capital gains taxes in both the U.S. and Canada. So for the U.S., the Biden administration has proposed a raise of the capital gains tax to 44% on those individuals and corporate entities with over $400,000 of income, I believe. Similar policy in Canada has been proposed, except they're raising it to above 60%. Uh, what is this going to do?
These are completely idiotic and destructive proposals. Uh, North Americans have been forced to buy inflation to get out of currencies and into hard assets. The hard assets go up in price as a result of inflation. And then when you want to sell them, the government steals 40 or 60% of that in the form of capital gains. So no, capital gains taxes should be eliminated, not just reduced, but eliminated, not raised. These people have these people are living in a bizarro world.
Well,
Everything's upside down.
I've heard the argument from somebody I spoke to that this will help alleviate the government debt problem, which is to say it'll bring down the deficit somewhat.
This is this is crazy talk. Although a lot of people are making this crazy talk, it's like alleviating an alcoholic's problem by giving him more alcohol. I mean, it's the same thing. Trusting the government with more money to solve their problem is like giving, as P.G. O'Rourke like to say, giving a 16-year-old boy keys to a Corvette and a bottle of Jack Daniels and telling him to go out and have a good time.
Okay. So you don't think that the issue of debt is going to be solved by higher taxes, generally speaking.
Oh, no. If you want to solve the problem, you cut expenses. You stop spending because most of the money the government spends is on things that are not just stupid and non-productive, but they're actively destructive. Well, you can start with the wars that they're fighting. In the case of the US, they're fighting on two fronts now, maybe soon on three fronts. It's going to bankrupt the country in addition to killing hundreds of thousands, maybe millions. In fact, maybe they'll go for billions of people in the future.
Speaking of debt, at the same WEF forum, the president made this comment. We haven't seen this kind of debt since the Napoleonic Wars. We are getting close to 100% of the global GDP in debt. He's talking about world debt. Many countries, as you know, including the US, has already surpassed 100% of debt to GDP levels. Certainly, this is an issue for a lot of people. What can we do about this debt issue, if it even is a problem? I mean, if your view is that this isn't really a problem so far, then that's okay.
No, it's a big problem so far. And the reason it's a big problem is because some people owe other people that debt. And the people that are owed the debt rely upon it being paid. Uh, but it can't be paid. So all this government debt and a lot of private debt is going to be defaulted on. Uh, Look, there's only two ways the government can pay off its debt. One, by taxing its subjects, and two, by inflating the currency. And they're doing both, and both are extremely destructive. So we have a real problem here. And that's why I say that we've embarked upon something I call the Greater Depression. And what's going to happen, or what is happening, is it's going to be much worse and much longer lasting and much different, this depression, than the unpleasantness of 1929 to 1946. And during that period, incidentally, war was a big part of the equation. I think the war situation is going to get much more serious, quite frankly.
Well, speaking of depression, some economists have argued that one of the catalysts for the Great Depression of the 1930s was the introduction of the Smoot-Hawley Act, which raised tariffs on foreign imports. Do you think that a similar protectionist measure today would be the impetus or could be the trigger for the next Great Depression or the Greater Depression, as you like to call it?
Well, you're quite correct on that. These governments, they're 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 capable of anything, telling people what to do, what not to do, what they can buy, what they can't buy, at what price, and so forth. Uh, yeah, it's entirely possible that the U.S. and Canada, for instance, are going to have foreign exchange controls in the future. Let's take the U.S. in particular. Uh, Most people are unaware of the fact that the major export of the U.S. isn't Boeings and soybeans or IBMs, any of that. The major export of the US for the last 40 years has been dollars. We print up dollars and ship them abroad, and the nice foreigners ship us Mercedes and Sonys and God knows what else. That's going to come to an end. And as it comes to an end, the government will attempt to control its subjects, not control itself. And what that means in the monetary realm is foreign exchange controls, where you're going to have to ask approval to send money out of the country, or perhaps even to travel within certain dollar limits. I mean, they can hardly prohibit travel, but they might say, sure, you can go abroad and take a European vacation, but you can't spend more than $5,000, let's say, or something like that. I think that's in the cards. It's predictable because at some point, these scores of trillions of US dollars, which have been expatriated, shipped out all over the world in exchange for real goods that have come into the US, when that stops, the standard of living of the US has been artificially increased by, in effect, a debt. Dollars that are outside the US are really a debt. And when they come back to the US, what's going to happen is we're going to have trillions more dollars floating around inside the US, which means prices will go up. And the titles of land and businesses and share certificates are going to be owned by foreigners who will trade their dollars for those things. So this is a real serious problem that I don't think many people are talking about.
Are we going to get a market crash first before the depression sets in, like what happened in 1929?
Hard to say. It's a question of how quickly the US government, or I should say the Federal Reserve, prints up money. I mean, if they print up money in adequate amounts, there's no reason why the stock market should crash. Although I've got to observe right now that in terms of price earnings ratio, price to book value ratio, all the traditional parameters, the stock market is very, very overpriced. It's as overpriced as any time in history. So I really don't have any interest in being in the conventional stock market. It's too dangerous. Not saying it's going to crash. That's a question of printing money as much as anything else, but I don't want to be in it.
So if not for the stock markets, then the obvious question would be where would we go? And I think this is kind of the theme of your books, Crisis Investing and then Crisis Investing in the 90s. I believe you talked about how to protect your wealth in times of crises, or in this case, a greater depression. What should we do?
Well, I've long been an advocate of gold, both as money and as a speculation and as a vehicle for savings. I started buying gold when it was $42 an ounce back in well, way back when, 50 years ago. And it's treated me pretty well. And sometimes gold has been an excellent speculation in addition. So my suggestion to listeners is that if they want to save money, set aside capital, they do it by buying gold coins and buy silver coins too. That's what they should do. If they want to speculate on things, well, you can do that in the stock market and the bond market and other places. We could talk about all these individual things as well.
Yes, in the 1970s, you did very well speculating on gold. What was it back then that made you look into that asset?
Well, the price of gold uh, had been $35 an ounce since Roosevelt artificially fixed its price at that point. Uh, you'll recall that before 1933, you could take your $20 bill, go down to the US Treasury or any bank for that matter, and trade the $20 bill and get a double legal gold coin, which is to say an ounce of gold. Well, since then, that's been impossible because the US government has been printing up paper money much faster than it's been adding to its gold reserves. Um, so I guess they're not going to stop doing that. I mean, they painted themselves into a corner. They can only print money at this point. Um,
At the time, did you
not sure
observe
if I've answered the question
at the
or not.
time, did you observe any indications of a rise in the gold price from macro forces like higher debt, higher inflation, much lower dollar, et cetera, et cetera?
Yeah, look, it was obvious to me a long time ago, having paid attention to economics and the way the world works, is that the US government was getting out of control. I mean, that these people think that government not only should, but can control the economy, that they were going to continue printing money. And now it's gone into hyperdrive. So actually, gold at 2,300, where it is more or less today, is probably as good a value as it was way back when it was $42 an ounce.
So you think it could go much higher, even from today's levels?
Yes, yes, because they're going to continue printing money. The government has really no other alternative for funding itself. Well, it taxes a lot,
What
and they're trying to raise taxes too. But yeah, they can do two things. They can tax money and they can print money.
if
So
you
that's
were
what they're going to do.
if you believe that at some point some governments will adopt gold as a reserve backing, or perhaps even go back to the gold standard, why would you, as a speculator, then want to buy gold? Because wouldn't the price of gold be fixed again, like it was in the Bretton Woods era?
Yes, that is going to happen in the future, I believe, but it can only be fixed at a much higher price level than it is today. Uh, there, it's said that the U.S. government owns 265 million ounces of gold. Okay, so what you have to do is take the number of dollars in existence and divide the number of ounces of gold that the U.S. government owns and come up with a number. And these numbers are all floating around and inaccurate, but just US dollars that are outside the US, not forget about the dollars inside the US, but just the dollars outside the US. And nobody knows how many of those there are, but it's probably something on the order of 30 trillion. I'm a wild guess. And you come up, if you use even that number, you come up with, doing the math in my head, $10,000 an ounce. So no, it's going higher. I'm not talking about tomorrow or next week, although we're in a bull market. But yes, it's going higher. If we talk at this time next year again, I think it's going to be way above $2,300 an ounce.
We spoke last year, and it was, yeah, much lower than today. So your instinct then has been correct as well. Let's talk about then some other asset classes. Mining shares, for example. You talked about how maybe the overall stock market may not do well in this greater depression. What about mining stocks, Doug?
Well, let me preface what I'm going to say, David, by saying that mining is a crappy industry. It's really a 19th century choo-choo train industry. And young people don't want to get into mining today. I mean, who wants to go out and play in the dirt with big yellow trucks? I mean, when you can type things into your computer and
Apparently they pay well, so That's an
Well,
incentive for a lot of young people. Yes.
yeah, that's true. But look, mining is a terrible industry because you've got to spend millions, maybe many millions of dollars to go out on an Easter egg hunt looking for a potential deposit. The odds are way against you finding even something that looks like a resource. And then you have to develop it, which is going to cost you many more millions, tens of millions, hundreds of millions. And then your trouble really starts when you've done enough drilling at great expense to find, yes, there's an ore body of some type down there, gold, nickel, copper, whatever, what have you. Then it's going to cost probably billions to build the mine. All this money's upfront on the if come see. So as a business plan, that's a horrible business plan to make guesstimates for huge amounts of money that you'll probably fail at. And then after you're in production, uh, you have a fixed asset where governments will tax you and NGOs will try to shake you down and make your life miserable. And native groups will look for their piece of the pie. It's a horrible business. So why am I interested in mining stocks? Because they're a very small area of the market. And sometimes they go from being very cheap, too cheap, to very expensive, too expensive. They're really the most volatile class of stocks in the world. They're even more volatile than high-tech stocks. So your timing has to be good. Now, right now, is an excellent time to get into them. It has been for the last couple of years. They've gone nowhere for the last couple of years, but I'm a buyer. I think that price-wise, they have a great future ahead of them.
Is that because they've been undervalued relative to the underlying metals, gold, for
Yes,
example?
very much so. I mean, gold has gone up a lot, but the companies that mine it have not. Uh, what does it cost to mine an ounce of gold? Well, a lot of definitions of what constitutes cost, but all-in sustaining cost is the most popular, maybe the most accurate parameter of what it costs to mine an ounce of gold. And industry-wide for producers, that number is roughly $1,300 an ounce right now. Gold's selling at 2,300. So the big mining companies are making a lot of money right now, but they're not recognized. Now, why is that? Because, people hate the idea of mining. They say all these terrible things about mining companies, and with the DEI and ESG parameters that big fund managers like BlackRock and Goldman have, they don't want to own mining companies. That's like the kiss of politically correct death. So they're under-owned right now. So I'm a buyer. I think that that's going to change. At least if you want, steel to build buildings and aluminum to build aircraft and so forth.
So generally, then I'm guessing you prefer the producing companies rather than the juniors looking to get a deposit or find a deposit.
No. Well, yes and no. Because in a bull market, the big companies that currently have earnings are always the ones to move first. I mean, they're the names people know. They're what people will buy first. But I'm not crazy about big mining companies because they're run not by entrepreneurs. They're run by suits. They're run by bureaucrats. So the companies that I prefer to speculate with are, let's say, smaller producers or, God forbid, even explorers. If I like the people that are running the companies and like the results they seem to be getting, because these small companies, these micro caps, no, they're not even micro caps. They're nano caps. Some of them are pico caps. They're so small that they tend to be very volatile. And it's possible, because I've done it, to get 1,000 to 1 over the course of a few years. That's possible. Unlikely, but possible. But when the market gets the bit in its teeth, the average mining stock will go up 10 to 1. Many will go 100 to 1.
Someone might say to you, Doug, that sounds like gambling, betting on 1,000 to 1 odds with very little chance of success.
Yeah, I see. Yes, I see that. And the problem is that many people confuse speculating with gambling, uh, but they're very, very different. Gambling is taking an even odds bet, or even less than even odds if you go to a casino, obviously. I'm not interested in that. When you're a speculator, what you're doing is you're capitalizing on distortions in the marketplace caused by government, which is the major factor in the marketplace today. So if you know something about the mining business and know something about geology and know a little about mining engineering and know about the politics that are involved and the people that are involved, you can make an intelligent assessment of what's likely to happen as opposed to what the hoi polloi who don't know anything about mining think. So yes, it looks like it's gambling, but it's not, or at least it shouldn't be.
So how would you even the odds in your favor? Let's say you were to pick a junior explorer to invest in or speculate in, and there's thousands to choose from. How would you screen for them such that at least your odds aren't close to zero?
Well, over the years, I've developed a mnemonic. I call them the 9 Ps. So you can remember them and don't forget them. And they're all things that begin with the letter P to help you remember them. And the first is people. It's more important than all the other P's put together. Good people make for good business. So living in Vancouver, you've got all kinds of people involved in the mining business, and you want to sort them out. You want people that are technically competent and have Boy Scout virtues. Then after that, you look at the properties that they're playing with, and you have to know something about how to assess them. Look at the properties: small deposit, big deposit, single metal, multi-metal, many, many, many things. The next thing that you might want to look at is financing, spelled with the PH. It's great if you have good people and a good property, but how are they going to finance it? Are they capable of doing that? How much money is in the bank, or do they have debt? Uh, so forth. Uh, Politics, it's another P. What's the jurisdiction? Is it in Quebec or is it in, God forbid, Massachusetts? Uh, so you have to analyze where it is. Is it in the Congo or is it in Finland? Because the political situation in all these places is different. Uh, the paper, how much paper is out there? These companies, the main thing that most of them produce is metals. It's paper, selling stock. So who owns the stock? Uh, what's backing each share in terms of dollars? So there's a lot of things to look at before you decide to speculate. And incidentally, I do say speculate because you can't invest in mining companies, really. I mean, they're too unpredictable to invest in. That's why Warren Buffett famously never invests in mining companies.
Well, he also doesn't like gold, but that's a conversation for for another for another time, Doug. Two more assets I want to ask you about. The first is bonds. You had said on my show last year that you expect interest rates to perhaps rise to double digits. While the long end of the curve has been steadily rising since then, we haven't retraced 5% on the 10-year yet, although it's inching towards that level. Can you recap your thesis one more time about why interest rates might go higher and ultimately what this means for bondholders?
Well, it's a mystery to me why anybody would buy a long-term bond at this point, because I think that you can't trust the government inflation numbers, US government. Uh, they're only slightly more reliable than the numbers that the Argentine government puts out, quite frankly. So why would somebody buy a long-term bond and tie up their money theoretically for 30 years maybe to get a 5% return uh, when actual inflation is probably running, it depends on who's computing the numbers, 8 or 10%? I mean, you're like locking in a loss of 5% per year. But there are other risks to bonds. I mean, it's not just the interest rate risk in the it's it, there's a risk of default. Perhaps not with government bonds because they can always print up money to give you the dollars back.
I watched
Uh,
an old interview of yours where you actually said and you recommended that a government default on its debt because back then you had said that it's unfair for the government to uh, pass on this debt to the next generation and have them in uh, debtor servitude.
yes, that's quite correct. I mean, where do where do people think the money is going to come from just to service these all this debt? Uh, the U.S. government is now at the stage with interest rates where they are and the amount of debt that there is, where just paying just the interest bill on US government debt, we're talking $1 trillion per year. So where's that money going to come from? Well, I guess it's going to come from the young people, frankly, that are going to have to pay for that debt. So it's going to be defaulted on eventually anyway. There's two ways you can default on government debt. One, by inflating it out of existence. Well, that's something the Argentines have done any number of times. The US can do that. Or a more honest thing to do is say, we can't pay it. We were stupid, and therefore we won't pay it. And I kind of like that better because it's forthright, it's honest, it'll create actually less damage in the society than inflating out of existence over time. So yes, that's what's going to happen. There are no alternatives. It'll be defaulted on. The only question is how will it be defaulted on? And I also like the idea of default because it'll punish the people that have been enabling the U.S. government by lending it more money.
Well, wouldn't that put a lot of people in the fund management business out of business and have ripple effects throughout the economy?
Of course, but let me point out that the economy is over financialized. There are way, way too many people, in my opinion, uh, shuffling dollars around, buying and selling stocks, not really producing anything. I mean, look, initially, the stock market was about raising capital to fund productive businesses. It was pretty simple. There weren't a lot of stockbrokers, but today everybody's involved in the financial business. The world is over financialized. Uh, that's one reason why it's become corrupt. So, yeah, that's right. The number of people that are in the financial business would drop tremendously. And the world needs more, frankly, the world needs more plumbers and electricians, it doesn't need more stockbrokers.
The other asset I wanted to ask you about is passport portfolios. You had talked about this even on your own website, International Man, about having a portfolio of passports in case things in your domestic country, where your country of domicile, uh, fall apart and you need to go elsewhere. Which passports should we be collecting?
Well, you should definitely have more than one because uh, passports are, it says right on your passport, if you look, it says this is the property of the US or Canadian, whichever government you're looking at. And if it's their property, they can take it away from you. And if they take it away from you or invalidate it, it means that you're stuck just in the country where you are. So it's good to have a backup system. So you should have at least one other citizenship that you can rely on. So what should you do? Well, look, it's probably even more important it's important for both Americans and Canadians because the problem with being a US citizen, there are a number of problems with it, but one of them is that even if you leave the US and go to live in Costa Rica or anywhere, the US government is still looking to you for taxes for the rest of your life. That's rather shocking, even if you never return to the US. Canada is much better that way. But many governments in the world are looking at following the US lead and taxing their citizens, not based on residence, but based on citizenship. So it's another direction, another way where the world is heading in the wrong direction, actually, becoming more dangerous from the point of view of an individual who's trying to live his life.
Well, I encourage people to check out your website, International Man, where you talk about this issue in more depth. Doug, final topic I'd like to touch on with you. You told me offline you're working on, a body of work that explores what people should do with their education. You had said to me offline that perhaps post-secondary education, college, universities may not be the optimal course for most people or many people. Like to get your thoughts on this. Why is that, and what should we do instead of college?
Yes, I'd go further than that, David. It's actually not only not optimal, it's highly suboptimal. I'm not talking about taking STEM courses, science, technology, engineering, math, where you need lab work, you need the formal discipline. Okay, that's what college is still fine for. Uh, Most people don't take that, though. They take some type of so-called liberal arts, where they're in fact being indoctrinated for 4 years and at huge expense. So you get out of 4 years at school, you've actually learned nothing of value, but the main thing you've taken away is a huge amount of student debt, which is going to be an albatross around your neck paying it off. So I suggest, no, don't go to college. That's a mistake from many points of view. And this book that I'm working on with Matt Smith, who shares my podcast with me, Doug Casey's Take on YouTube, is exactly what should a young person do with that 4 year period of time and the money that he'd otherwise fritter away, giving it to some university. Where should he go? What books should he read? What should he learn? And we're doing this right now with Matt's son, who's, first thing he did was he gained an EMT, took a course. He's now a registered EMT. That's allowing him to, this summer, for his summer vacation, kind of, he's going to become a forest fire fighter. These guys that go to where there are brush fires and put them out, stationed out west and going wherever the fire is. Pay is good. He'll learn a lot. Meanwhile, he's reading lots of books, especially classical literature. He's taking courses to learn to become an expert chess player after he masters that game, at least to a degree. He'll take Go and become a master Go player. He's learning Spanish. He's formally disciplined to learn Spanish. And after that, probably Chinese would be the best language to learn. So by the time he's 22 years old, he's going to have an immense body of practical knowledge and theoretical knowledge and wisdom and experience, whereas the average person that goes to college for 4 years is just going to spend the time, frankly, drinking beer and chasing girls. So that's it in a nutshell. And hopefully that book will be out within the next year. And when we talk next year, I can show you a copy. I'm not sure if people read books these days, but the book will, I think, get written at this point.
Well, certainly we should read your books. Where can we find your books?
Well, I'm very proud of my novels, the High Ground series, where we trace the evolution of our hero, Charles Knight, was a speculator in #1, goes to Africa, gets involved in a bush war, and he becomes a drug lord. The idea is to show that these politically incorrect occupations, you can be a good guy. So he becomes a drug lord in novel #2 called Drug Lord. #3, he's kind of pissed off at this point after they put him in jail for a couple of years. He becomes an assassin, where we talk about the assassin's trade. And the next one to be out is Terrorist, where he's accused of being a terrorist. And of course, I have a lot of views on terrorism as a method of warfare, which will shock people. But it kind of amuses me to say shocking things.
Well, if I'm sure some people enjoy being shocked, so I guess your books are a place for that. So tell us where else we can find your work. You mentioned you have a podcast on YouTube, International Man.
Yeah, those books are on Amazon, of course, where all books are. On YouTube, Doug Casey's Take. And I guess your show will be on YouTube, among other places, I imagine. Um, and internationalman.com, where it's an excellent free website. We have great articles every day. So I think people should take a look at those things.
Perfect. Well, Doug, I appreciate your time today, and we appreciate your insights. Thank you very much. We'll speak to you again next time right here on YouTube. So
So it's
stay
always a
tuned.
pleasure, Dave. Thank you.
Always a pleasure to have you. Thank you. Don't forget to like and subscribe and follow Doug in the links down below.